Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 3 strong buy stocks under $10 per share. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 companies all priced under $10 per share and with a strong buy consensus from Wall Street analysts. On top of that, they have price targets that would imply some double-digit upside potential. We're going to take a look at each of these companies, what it is that they do, and what those analysts are predicting for the stock's future. We found these stocks using the TipRanks stock screener. Found under the screener menu, here I put in a few different filters, including a neutral to outperform rating, an upside potential of over 20%, and a strong buy consensus. And then we got our list of stocks below, which I sorted by price. You can try the stock screener for yourself on the TipRanks website or right on the TipRanks mobile app, which you can download using the links in the description down below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into these 3 strong buy stocks. First on the list, we're taking a look at Stagwell. They trade under the ticker STGW, currently priced at $5.65, making them our cheapest stock of the day. They are down over 19% in the past year, but in the last 3 months have gained 30%. Stagwell is a global marketing and communications group. They offer a wide range of services with a focus on digital-first marketing solutions. They operate as a challenger network to traditional holding companies, emphasizing creativity, technology, and data-driven strategies. Some of their key activities include advertising and creative services, digital transformation, media planning and buying, and public relations. They focus on integrating creativity, media, and technology to drive business growth for B2C, B2B, and DTC brands. Looking at TipRanks AI stock analysis, they do score an outperform. While there have been some uncertainties affecting stock performance, including a slowdown in media revenue due to a single client, they also achieved $117 million of net new business wins during their last quarter, marking the 5th consecutive quarter with over $100 million of net new business. Their digital transformation and marketing cloud services also showed significant growth, highlighting their potential. And in that latest Q2 earnings report, which came out July 31st, they did see both an earnings and revenue beat. An overall revenue of $707 million beat by $14 million. They also achieved a swing of $122 million in operating cash flow improvement. Following that quarterly report, we did hear from a 4.5-star analyst at Needham. She noted the company's impressive financial performance and strategic business wins, saying their consistent ability to secure new business is a factor contributing to the buy rating. They noted the $117 million in net new business wins, with notable clients such as Samsung, Google, and New Balance contributing to the success. The Stagwell stock is rated a strong buy based on 8 current analyst ratings, with 6 buys and 2 holds. And the average price target of $8.27 implies an upside potential of 46%. Looking at those price targets down below, they range from an upside of over 12% to a few at 77% upside. For our second stock today, we have a company called Mama's Creations. They trade under the ticker MAMA or MAMA, currently priced at $9.30 per share. Over the past year, they have gained about 18% and are up 9% in the last 3 months. Mama's Creations markets and manufactures fresh deli-prepared foods, operating as a one-stop shop deli solutions platform. Founded in 2009 and based out in New Jersey, the company produces a variety of high-quality, fresh, and easy-to-prepare foods rooted in their Italian heritage under the Mama Mancini's brand. The company distributes to over 12,000 grocery, mass, club, and convenience stores nationwide, including major retailers like Costco, Sam's Club, Publix, Aldi, and BJ's, with plans to expand even more. They also score an outperform on TipRanks AI stock analysis. Nearly 100% of their products and customers are US-based, making the company a solid hedge against tariff-impacted companies. And potential new distribution partnerships with major retailers like Target and Kroger are seen as important growth catalysts. Their next earnings report is coming up soon on September 8th. This does follow a strong quarter at the start of June, where they had an earnings beat, record revenue, and outlined some double-digit growth targets. Volume growth and new product introductions drove their record revenue of $35.3 million, which increased 18% year over year. They reported $6 million in cash flow from operations, with cash and equivalents rising to $12 million. Yesterday, they announced a new acquisition, and with that, a little Q2 preview. They shared that they had acquired substantially all of the assets of Crown Enterprises for $17.5 million in cash. That is a wholly owned subsidiary of Cisco. And along with that, they said that they anticipate revenue growth of at least 20% to over $34 million for their Q2. Mama's Creations has 5 current analyst ratings and does come in as a unanimous strong buy. The average price target is $11, implying an upside potential of 18%. A lot of those price targets are from a few months ago following that last earnings report. Current ratings range from a downside of 3% to an upside of 50%, but we'll see how analysts weigh in following this next report. If you've made it all the way to our third stock today, then do me a favor and make sure you've hit that thumbs up button. Last but not least, we're taking a look at Mitek Systems. They trade under the ticker MITK, currently priced at $9.77. Their stock has gained 15% overall in this past year, but is fairly flat the last 3 months, up 1%. Mitek is a software company that specializes in digital identity verification and mobile image capture solutions. They bridge the physical and digital worlds with products designed to enhance security, streamline customer onboarding, and combat fraud. Their key offerings include Mobile Deposit, Mobile Verify, Check Fraud Defender, MyVIP, MyPass, and ID Live Face. They serve over 7,900 global operations, including financial institutions, telecommunications, and marketplace brands. And similar to our other 2 stocks today, they also score and outperform on the TipRanks AI stock analysis. While there are concerns that valuation multiples could continue to lag until more significant top-line growth occurs, the company did see their identity business approach profitability, and demand for their new MyPass and MyVIP products is strong, suggesting a promising market reception. On August 6th, they did share their Q3 earnings report, where they saw both an earnings and revenue beat. Earnings per share of 22 cents came in 3 cents ahead of expectations, while revenue climbed a couple percent to $45.7 million, beating by over $2 million. They also saw their software as a service revenue grow 23% year over year. Just last week, we did hear from an analyst at William Blair. They reiterated their buy rating, saying that discussions with the CEO and CFO revealed promising trends in the company's mobile deposit business alongside the growing potential of their Check Fraud Defender initiative. With the stock currently trading at a valuation of just 10 times the projected earnings for 2025, they see it as an attractive investment opportunity, especially given the potential for sustained double-digit organic growth driven by these new ventures. Mitek Systems has 6 current analyst ratings and comes in as a unanimous strong buy. The average price target of $13.30 implies an upside potential of 36%. Looking at those price targets down below, they range from an upside of 17% to 53% upside. So that is a quick look at 3 stocks, all priced under $10 per share and with a strong buy consensus from Wall Street. Let me know your thoughts on these companies, and if any of them catch your eye, I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please always stick to your own investment plan and do your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.